Rewrite, a show where we interview people that found the keys to rewriting their lives. Today we'll be meeting with Billie B. Josey II, a 30-year stock trading veteran who has used the stock market to generate wealth for himself and enjoys educating others. He's also my father-in-law, who I call Pops. Welcome, Pops.
Thank you for that wonderful introduction. I'm pleased to be here.
Yes, sir. Now, every time you stay with us, we always see you viewing your stock list and watching YouTube videos to learn strategies, and we just see you adding stuff to your trading toolbox. Sometimes you walk away from the computer happy, and other times you need a drink and need to walk away because you miss earning on a trade. It seems like such a passionate sport.
Oh, definitely. It's part of my DNA now just to
Yeah.
review what's going on in the market, even though I'm not a very active trader. However, I do monitor, the stocks that I have and then try to be selective in any new breakouts or any new innovations or any new expansion of stocks that could be part of my portfolio. Mhm.
Yeah, and I'm so looking forward to just asking you a few questions and just picking your brain about what works for you. So let's get right into it.
Okay.
So how did you start trading?
Well, about 30 years ago, I used to frequent the library and visit the financial section where I could pick up a Wall Street Journal or the Investor's Business Daily or other paid subscriptions for free at the library. And as I started reading them, I became very interested in the market and then wanted to know how I could invest in some of the household names that I was reading about.
Mhm.
So one day, on the magazine stand at the library, there was a magazine that I hadn't seen before, which was called the National Association of Investment Clubs. So that intrigued my interest, and I began to read the magazine. And lo and behold, when I went into the ads section, there was a phone number of a local investment club where I was living at the time. I believe it was Atlanta. And the
Mhm.
ad stated that they were uh, starting investment classes on next week. So I phoned the number that was in the magazine, and lo and behold, the organizer gladly spoke with me and invited me to come up and sign up for the class. And so class was like $25 for a 6 weeks course. And
Wow.
once I attended the class, I was taught how to evaluate companies that I was interested in. Mainly back then, it was Home Depot, Walmart, Microsoft, AT&T, ExxonMobil, stocks like that, household names.
Mhm.
And the class, when I was in the class, it taught me how to implement a time-tested methodology, which I refer to as the Big Five. And these characteristics of companies include a strong leadership team, which, as you can see, back in the 90s, Home Depots, McDonald's, and Walmarts were popping up all over the place, even the Exxon gas stations as well, as they
Mhm.
were acquiring, Shell and Mobil and those types of oil companies. And you got to have industry poised for growth. You can see that again happening when you observe what's going on in your own neighborhood, and you can see those names, popping up. Like right now, you see Wawa's popping up all over the place.
Yeah,
So
they're
that
everywhere.
is a
Mhm.
example of industry growth, commanding market share. They have a huge market share worldwide, and they have strong sales growth. So with those five, and then and have a large target market. So with those five uh, points or characteristics of a company, you can have a firm foundation that when you invest your money, it is going to have a very good chance of growth, price appreciation, dividend income, many things that accompanied by investing in these, what I call wonderful businesses that continue to grow and expand.
Awesome. Would you call yourself a day trader or a swing trader?
Today, I look to earn, let's see, I'm not a swing trader, I'm not a day trader. I, for the most part, am a long-term investor. However, when I do see opportunities for short-term gains on some technical criteria that I, use to signal a breakout, at that time, I become somewhat of a swing trader and look to ride the wave as it's coming off of a bottom and moving into a short-term trend, a short-term uptrend.
Mhm. What I really liked about what I like about stocks, because I'm learning right now, is the ability to earn income whenever you want to earn it. So you can earn daily, you can earn 5 years from now, you can earn a month from now. But that's really why I want to sit down with you as well, because it's such another great tool to start building wealth. So yeah, thank you for sharing.
Absolutely.
Yes, ma'am. Now, if anyone is just starting out, what would you recommend that they do to start, or what advice would you give to anyone that wants to start trading?
Well, basically, you just want to educate yourself, first of all. Learn as much as you can about the market, about investing before you start trading. Take some time to learn about stock market, various trading strategies, and investment principles of, some that I've mentioned in the previous question, I think the first question. And understanding the basic stock analysis, market trends, and also risk management, which is very essential. Uh, Never want to put all of your eggs into one basket. If you have a say, for example, a account value of about $5,000, you never want to put that into one company. You want to divide that about 20%, no more than 20% into one company. That is what keeps you in the game because, if one stock doesn't work out, you may have three that are working out and you can still be profitable.
Mhm. Awesome, awesome. And then you said the amount, you said 5,000, but can you start with 100? Can you start with 1,000? I mean, I guess you start with whatever you have, but to
Well,
really
yes,
see
you can,
some
in
gain.
today's market, you can buy fractions of shares. The software that is available, some of the platforms that are available. If you were interested in Microsoft, which is a $300 stock, you can buy, I believe it's one-fifth of a share
Mhm,
at that time. But
mhm,
the spectrum is very wide. You can start with $100, you can start with $50.
mhm,
Um, However, it is recommended that when you start with that amount, that you set aside some amount that you're comfortable with, that won't strain your budget,
mhm,
and begin doing what I call dollar cost averaging, where you can put that $10 or $20 or $30 a month toward purchasing uh,
mhm.
one particular company that you are very interested in and allowing that to grow, until you get about 100 shares.
One thing I'm doing right now too is paper trading. So what I did is I set up a paper trading account and it gives you like 6 figures, right? But I don't currently have 6 figures in my account. So what I did is I set it up to match the amount that I know that I want to start investing in to see
Mhm.
how many gains I can make. And that's been working well, just the practice with the paper trading account.
Well, absolutely. That gives you confidence. That builds
Hmm.
confidence
Hmm.
that once you have done your homework and you say, okay, I want to invest in stock ABC because it meets these fundamental criteria, and it gives me a chance to uh, practice owning that stock and watching the price appreciation, watching the dividend growth, and also just following periodic news about that particular stock to keep you, on your toes. So that's very
Okay.
good that you're doing that, and I suggest that new um, those that are new to investing begin with a paper trading account and do virtual trading.
Now, when you place your trades, is it mostly with dividend type of stocks, or you'll trade stocks that don't always produce dividends?
At this stage in my life, I've learned that
Uh-huh.
dividend paying stocks, especially those that we at Gibraltar specialize in, pay double digit returns even if the price doesn't move as high as you would like it to over a certain period of time. So that's what um, our company is teaching right now, how to locate these double digit paying stocks, say stocks that are paying 10% annually. And on top of that, if you get price appreciation, that's gravy. So, uh, we published our August edition um, of the high dividend yield paying stocks, and two of the stocks that I highlighted is a company called ET that we hold now. It's an energy company,
Hmm.
and also a REIT, which is the initials are REIT. It stands for Real Estate Investment Trust. So those of you that want to invest in real estate and then don't want the struggle and the heartache that goes along with trying to
Yeah.
find physical real estate to, flip or fix up or rent out or what have you, this is an alternative that you can take, 1/10 the money that you would have to put into purchasing a physical building, and allow these experts that already have a vast portfolio of commercial properties, single family homes, and multifamily homes as well. And it also pays a nice dividend of about 11%. That is a company called, the symbol is ABR. Mhm.
Wow, what is that again?
The symbol is ABR.
ABR. Okay. All
Mhm.
right. I'm gonna notate that and add that to my watch list.
There you
Now, I
go.
know that you have your company. If you could tell us a little bit more about your company, the passion for your company, and how you got into wanting to produce a newsletter.
Well, I enjoy sharing the knowledge, wisdom, and understanding that I've gone through the years with others, especially young people, like my beautiful daughter-in-law that's interviewing me right now. So they can begin to establish a, uh, a sound and time-tested methodology in investing, wherein over the years you're going to be uh, gaining all of this money. If you invest today at, say you had $1,000 and you invested in ABR, and it pays a 11 or 12%
Wow.
dividend, there are
Wow.
many ways that you can calculate how much money you will have in 5 years, even if you did not even add to that $1,000. And it'll also there is uh, software out there that you can use that will allow you to um, project if you added $100 a month over the past 5 years, and you will, when you see what that amount grows to. Einstein said one of the eight wonders of the world was compound interest, and you
Hmm.
see how much interest you compound over those years. It's eye popping, and that's what's going
Wow.
to motivate you to keep on keeping on.
Yep. Yep. That's
Because it's
awesome.
like a snowball effect. It gets bigger and bigger.
Yep. Yep. And I think outside of just meeting our basic needs, because now we're talking about wealth, right? And we're
Right.
talking about easier ways to make money. We can go to a job every day, and we do that sometimes because we have to. But, outside of meeting your basic needs, investing should be a part of that basic need, not something you think about after, but I believe we should have line items for that. Like you said, maybe $100 a month. And if you can't
Uh-huh.
find $100 a month, what can you do outside of your 9 to 5 to find that $100? Because that $100 will set you up 5 years from now or 10 years from now.
Definitely.
We have to start
Two, 3
thinking,
years from now, if you're in a bull market like we are right now, it's
yeah.
pulling back a little bit, taking a little bit
Mhm,
of a breather. But I
mhm,
call these buying opportunities because
mhm,
the price of the stocks that you're interested in come down,
Mm-hmm.
right?
Mm-hmm.
They've reached a high, like, some of the stocks that, we've invested in have, reached a high. They've come pull back maybe like 3, 4, 5%. However, that allows us to take um, uh, money and to uh, increase our holdings at a
Hmm.
cheaper price
See?
and
Yeah, you buy
continues to
when it's
grow.
low.
So these are some of the gems that I like to share with young people, and especially and others that are interested in investing, because once you become a at a certain skill level,
Hmm.
it becomes easy as breathing. You don't have to fret. You don't have to think about it too much because you put in the thought process prior to making that purchase. That's the most important thing. Do your homework. Be sure that it meets those financial fundamentals. Many of these companies have been around for 50, 60, 70, 100 years, and they're not going anywhere. They're continuing to
Hmm.
grow.
Hmm.
And you
Hmm.
grow with them. As they grow, so does your um, um, portfolio.
Hmm. Can we talk about, you just said we're in a bull market, 2023, we're in a bull market, right? So that
Hmm.
means that it's going down. And can you talk about some of the stocks that are going down? They're cheaper. You should buy them now because we're in a bull market, right?
Right.
So,
It's a temporary correction going on right now. The long term
mhm,
right now is a uptrend. It looks like it could be correcting some more, but we only can observe that I observe it on a week to week basis. I look at it once a
mhm,
week and I say, okay, we're still in a long term uptrend, but we're in a short term downtrend, which
mhm.
again, most of the professionals say, you buy on the dips. When you see the
Yes.
stock that have these strong fundamentals, you can buy on the dips. So that is kind of what's happening now.
Can you give me your thoughts on the popularity? People will buy based on what they hear on TV, or they'll buy based on what's popular, right? What are
Yeah.
your thoughts about that? Buying without, because I've approached you several times when I had no knowledge, and I said,
Uh-huh.
"Oh, this is what I'm thinking,"
Right.
and you were you.
So no, you don't want to get stock advice from the water cooler, as I before COVID, we all had to be in the office, and you be at the water cooler, and you're having these conversations, and it's based off of popularity. And nobody has done any evaluation on a time-tested method as to how this stock is going to perform in the future. And that's what you're doing. You're taking the future earnings of a stock, which the company provides you with their expansion plan and how they're going to implement it. And when you become skilled in reading those financial, uh, what do you call, earnings and profits reports, you can pick out those five easily. And, once you, again, understand what percentages that they want to grow, like many times I look at sales growth. And if they're projecting that their sales growth is going to increase by 15 to 20% year over year for the next 5 years, that's a checkpoint.
Yeah, 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 yep,
Right. So, but then, at those water cooler conversations are what you see some of the talking heads, not only on CNBC, but also now on YouTube. Everybody is an expert and they're like, buy this stock, but they're just trying to sell you to, click and subscribe to their channel so they can make money,
yep,
not necessarily having your best interest in mind.
yep,
You are your best uh, advocate when it comes to investing, and you need to be sure that you are investing in sound companies that meet a certain criterion that you're comfortable with. And that's
yep,
why, I like to teach and provide the newsletter. Not only that, we're developing the website to where we're going to give you a step-by-step process, just like I got in that 6 weeks training 30 years ago, it's condensed now into a ebook
Wow.
that
Yeah, yeah.
you can study for yourself. And if you need support, you can comment and let us know what questions that you may have. Right now, that's going to be provided, free of charge. And so those that get in early can get this valuable information and begin to apply that to your virtual uh, trading platform.
That's
See how
awesome.
it
And I know
works.
what we're gonna do at the end is I'll definitely post a link for your newsletter below so
Okay.
that people can continue to follow you. Whoever's interested can reach out to you, and they
Hmm.
can be added to your mailing list. That is awesome. And I think the
Marvelous.
summary of what I just took and what I've learned from you, just listening to you so many years, do not buy based on what's popular, right? I may
Right.
like to shop, but the places that I like to shop at, what are the fundamentals? What are the technicals telling me about that place? It may
Right.
not be good, so just making
Hmm.
sure that you are able to learn the fundamentals and the technicals before you purchase a stock. Don't just go off of
Right.
uh, what
Hmm.
you
Go
hear.
off word of
Hmm.
mouth. Check it
Hmm.
out. It could be a good tip.
Yep.
However, you want to verify that tip
Verified.
with
That's it.
your business model. This is what we're talking about. This is a business model. A
Yes.
stock is a business, and if they don't have a very good model, they're not going to last long.
Yeah.
So, but those that have been tested, proven, and tried 10
Hmm.
years, 15, 20 years, like IBM and like Cisco, that's one of the uh, stocks that really, uh, really made a lot of people a lot of money over the
Wow.
years, and they
Wow.
still doing it. So, and that's what,
Yeah.
and that's another
Yeah.
question that we have coming up. So I'll
Yeah.
share, more about that, on with a demonstration of a stock screen.
Yeah, can't
Um,
wait to do that. Can't wait to do
yeah.
that. All right. So before we get into the charts,
Uh-huh.
and a lot of the questions that I came up with you, I came up for you, are just based on what I've been learning, right? Because I'm just curious.
Hmm.
So indicators are a huge thing. Most seasoned stock investors, they use the most basic ones, but there's also some more complicated indicators out there that help you to read the market, when to get in, when to get out of a stock. What are your favorite indicators to use?
My favorite are moving averages, and that will be explained, in more detail, perhaps in another session or even in the ebook. But moving averages, price action, and volume, they have served me well when interpreting the direction of a stock. Hmm.
All right. And when you have that on a stock chart, then you start to see your chart patterns. So
Right.
we'll
You
go
start
over
to,
this. Hmm. Go ahead.
yeah,
Hmm.
that's where practice comes in. When you have, I read one book where it says, when you get in about 100 hours of reading a chart, it becomes natural to you, and you can
Knowledge.
do use different time frames, use the standard moving averages. And one rule of thumb is if the price is below a falling moving average, you don't want to be invested in that particular company at that time. Not saying it's a bad company. They may be going through one quarter of reorganization where they, like with one of the companies that I own now, ET is an energy company, and they have acquired another energy company. And then when that happens, usually they can't report the robust earnings that they did the previous quarter because they use that money for investing into another company that will expand them in the future.
Mm-hmm. Mm-hmm.
Mhm.
So it's like an
And the rule
acquisition.
of thumb is the price is
Hmm.
above a certain moving average, and it meets all of those. This is the technical side now, and it meets all of those fundamental criteria. Then you want to stay in that stock, and we can show you examples of that, later on. Mhm.
Okay, awesome. And then also, international stocks are very, very popular. People do Forex trading. They do, all kinds of international trading. It's really cool
Mhm.
because you can trade after the fourth, our US time. So you can still
Right,
make money while, when you get off work, when you sleep, and you can really still make money in stocks. It's just a beautiful thing.
right.
So international stocks, what stocks do you invest in?
Well, I keep it simple. I invest in an ETF, an exchange traded fund. The symbol is EEM, and EEM is a basket of international companies, emerging markets. That's what it stands for. EEM stands for emerging markets.
Okay.
So when I invest in EEM, I'm investing in India, Taiwan, China, Africa, these emerging markets that are growing, and but they have not reached the standards of a United States stock market or a London stock exchange or a Canadian stock exchange. These are smaller entities that don't have the type of exposure that, again, those aforementioned giants have that has been established for a long time. But these are areas that are growing, especially India, especially Vietnam, Taiwan, South Pacific, Philippines. So
Mhm.
the emerging markets ETF gives me exposure to all of that. And using the technical analysis that I use, it lets me know when to be in and when to be out. It's
Mm,
not like a daily thing that goes on. You don't have to watch it daily. You just kind of check it out once a week to see if, it's still in that uptrend that you would like it to be in. And then I have a program that is color coded. And when things start to slow down, a certain color comes up to give you an alert. And when things start to go down, at an accelerated level, it gives you a color code that, okay, take your money and run and wait for it to hit a bottom, rebound, and then maybe you can get back in later on down the road.
that is awesome. See, I hope to be there, right? I'll tell you
Right.
what happened to me. So when I started, right after you left the last time, there was a few things you were watching on TV, and I said, you know what? I'm very interested in all of this, and it's just timing sometimes, right? We've been
Uh-huh.
talking for years about trading, but it's just timing, and I was ready, right? So the teacher appeared, and all these studies start appearing. So, after trading, my paper trading for a little bit, I'm just now starting to understand and getting really excited about support and resistance. And I know you're going to
Right.
show a lot of that in your charts,
Right.
but something happened last week and I made a trade and I understand levels. Sometimes a stock won't go. Like I understand now, it won't drop because there is history, past history that shows it won't drop. And then boom, you can enter in, you can buy, and you can make some money. So technical analysis is really an
Oh,
awesome,
most
awesome.
definitely.
It is,
Yeah,
yeah,
most definitely. When you
yeah.
learn it and you understand it, just a
Hmm.
few
Hmm.
rules, regulations,
Hmm.
policies, and procedures, as I call them,
Hmm.
if you stick with them, they
Yeah.
will profit you.
Yep.
If you think you know more than this tested, proven, and tried methodology, and you say, well,
Yeah.
I'm just gonna hold on to it because it's gonna come back.
Yeah.
Most of the time, that doesn't happen.
Hmm. Hmm. So you have to have a strategy in
Have to
place.
have that
Yeah.
strategy and stick with it, even if it's
Mm.
taking a small
Yep.
loss.
Yep.
Small losses are okay. So,
Yep. Yep.
mm,
Paper trade, paper trade, paper trade, people.
yeah, they
Yeah.
say paper trade until you have at least 10 to 12 successful
Yes.
trades that you like pat yourself on the back like, wow, man, I made
I did
15,
that.
20, 30% sticking to this
Yeah.
trading plan or this
Yeah.
investment plan.
Yeah.
And I'm ready now to throw in some real money
Yes.
because now you have confidence and experience and you know what to look for.
Yep. And I just want to drop this gem too. Part of the reason why I got into this is because we do work full time, me and your son,
Hmm.
we work full time right now.
Hmm.
But we do want that time freedom. So I started to see that sometimes you can log in and see trades jump from, $3 to $20 sometimes. And if you've been monitoring certain stocks,
Hmm.
you would have made enough money to pay a mortgage or make money to travel or, it's just crazy that it's sitting right
Hmm.
there in front of your face. All you have to do is
Hmm.
shut down and learn a skill. Now, I have to tell you, I did disappear for a few weeks on my family, and I may still disappear because I'm very black and white when I'm learning something. When you see the
Uh-huh.
potential, right? When you see the
Well, yeah, that
potential.
is that's
Hmm.
concentration,
Hmm.
and
Hmm.
concentration brings you power.
Yes,
So
sir.
many times when you concentrate, you have to shut out any anomalies or any disturbances or any frugal, and I wouldn't say frugal, but any playtime,
Mm-hmm.
recreational time that will interfere with you mastering this skill.
There it is. And it's not
Once
always
you
going to be
master it,
understood.
then
Mm-hmm.
you can do all the playtime you want to,
Mm-hmm.
you know.
Mm-hmm.
So when it comes to learning, I'm a huge advocate of
Yeah.
just concentrating, mastering that particular piece, whether it be a week or two, maybe a month, that you have to like steady give an
Yeah.
hour a day
Yeah.
to it to master that skill, and you will be rewarded for the remainder of your life. Nobody
Yes,
can take that
sir.
away from you.
Yep. And before we get into the charts, can you
Hmm.
talk a little bit about trading psychology? That's huge. You know, when you start trading, just some things that have helped you to stay mentally strong for 30 years trading.
Well, sticking to a plan. You develop a plan, right? And you just have to define that plan that includes the financial goals, the risk
Mm-hmm.
tolerance, and the
Mm-hmm.
strategies that you need to use. And you stick to your plan and avoid making impulsive decisions based on emotions. That's
Mm-hmm.
where most people are. They trade on emotions, and
Yeah, you
they'll
can.
look at it every day, and they're apprehensive, and they second guess themselves, and
Mm-hmm.
that's a cause for disaster.
Mm-hmm.
However,
Mm-hmm.
when you have a well-defined trading plan, again,
And
concentrating it, learning it, practicing it until you've mastered it,
mm-hmm.
then things become easier. You know, the more you practice something, the easier it gets. Nature
Yeah.
says repetition is the mother of skill.
Yes, it is. And that's a life lesson right there. A trading plan that have a life plan,
Yes.
and be
Hmm.
consistent.
As
If
well.
nothing, something doesn't fit in that, don't entertain it for whatever season. Yeah,
Right.
we can't just live on emotion. I wish we could, but we can't.
No, no, that's a roller coaster ride.
Yeah.
Yeah,
Yeah.
you want to be steady and solid as a rock,
Yes, sir.
knowing who
Yes,
you
sir.
are, knowing what has worked for you in the past, and will continue to work for you in the future. Just stick to your plan.
Mm-hmm.
Hmm.
All right, so you ready to show us some charts? We want to see what's made you successful in the past, how you exit some trades successfully. Anything you want to show us in charts. We're ready for it. Go ahead
All
and
right, let's go
share
there.
away. Yep, it's coming up. And what platform do you use for trading?
This is called Thinkorswim. It's provided by TD Ameritrade.
Hmm.
It has basic functionalities, but you can program it to fit your trading plan as we forestated. So this is a 5-year chart of one of our holdings here is ET. Now, ET pays a 10% dividend.
Wow.
And here, back when we started picking up ET, um, you can see from what I was telling you about the color-coded moving averages that we use. This is one of the moving averages, and when it's red, it means that moving average is going down. And it also shows that when that moving average is going down and the price is below it, the price goes down.
Mm-hmm.
You can see
Mm-hmm.
that it started out, 5 years ago at 18, and then here it is during the pandemic. It went all the way back down to $3. So you don't want to be buying at 18 or anything at this level. Now that you understand each one of these bars represent a price level, right? So as long as this moving average is red and going down, that price is going down. And we have some other indicators in there that are a little bit more sophisticated, but we don't have time to go into them now. We can learn that in our lesson plan that we will provide for new investors. Now, here where we start to see the bottom, it's color coded. It's called a personality change. That red now turned to yellow, giving you an alert that hey, this stock is ceased to decline. It's going to start to incline, and you see these price bars now have turned from red to green.
Yeah. Mm-hmm.
Right now, as soon as that price bar comes above that green rising moving average, that was a signal for us to get in, at around $8 or so 2 years ago. Now, as long as that price stays above this rising moving average, and then here's one thing that you just touched on, it came down and touched this moving average and it did not turn red. It just kind of stayed right there. That is called support, right?
Or, yep.
Right. And it just bounced off it and it just kept going up and up and up. And we've been enjoying this price appreciation for the last 2 years, coming from $8 to $13, plus we get a 10% dividend yield
Wow. How often is the dividend paid out on this one?
every quarter.
Every
So
quarter.
you'll get 5% per quarter. No, I'm sorry, you divide 10% by 4. So you get
Mm-hmm.
2.5% per quarter. And every year it ended up being a 10% dividend added to your price.
Now, this may be a little bit more advanced with the question, but for your
Hmm.
moving average, what's the average? Is that a 200, a 20, a 50 moving average?
Well, this is a monthly chart. I like to use well, let's go back and make it a little bit easier.
Mm-hmm.
Uh, let's see here. Okay, this is a weekly chart,
Mm-hmm.
right? So each one of these price bars represent a week. And this moving average is a 30-week moving average. This is your
Okay.
long-term average here.
Okay.
And you're
Okay.
going to see it has its ups and downs and turnarounds, but as long as that moving average is rising and the price is above it, we hang
Mm-hmm.
in there. We had one week where it kind of scared us, thought it was going to turn around, but it just went down for a week or so. But the other indicators let us know that it was just a hiccup, and then it just started coming back again. Right?
Wow. Mm-hmm.
That
Mm-hmm.
green line represents that moving average is rising. As long as that moving average is rising and the price is above it, you stay in there. So you just kind of look at this thing once a week and say, I'm okay. And then you're going on
Okay.
about your business.
Wow.
You don't have
Yeah.
to
And
sit there and study and brood and try to figure out, where it's going and get nervous and call everybody that you on the phone and ask them what they think. No, you already know.
or look it
Is
up
it
on YouTube. Yeah.
right?
Yeah.
Yeah, yeah. Like, y'all don't know anything about this here? No, you know.
Hire $1 million coach. Yeah. Yeah.
So, but it takes time and practice. Another stock that has done well for us. This is a home builder stock, and and my son are in your brand new home there in Middleburg, and you went through the process of uh, seeing your house built from ground up. And I'm not sure what company you use, but this is one of the home builders nationwide. They are in the same company as D.R. Horton and other home builders, and this is Pulte Homes, PHM.
Oh yeah, we have them around here. Mm-hmm.
Yeah, and
Wow, look at them.
you're starting to recognize price
Yes, sir.
advancement already, huh?
Yes, sir. Wow.
So we pulled up a couple of years ago. I happened to be in Fort Lauderdale, and they were building I think it was a 300 home subdivision like yours now. 300 homes right there by Redeeming Word Church off of
Mm-hmm.
21st.
Mm-hmm.
And I looked and I'm going like, wow, I've seen Pulte homes before. And that was like, back in 2022, maybe a year and a half, 2 years ago. So when I looked them up, they were just starting to emerge in the around the holidays in 2022, and they were priced at $41. So we jumped in, and it has not given us any reason to even fret to get out of this particular investment. It is now standing at
Wow.
$86. It's taking a little
Wow.
bit, like I said, it's taking a little bit of a correction
Yeah.
right now,
Market. Mm-hmm.
but he's above our rising moving average. We don't care.
As
Yeah,
long
it
as,
can't go straight up, 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 up forever,
yeah.
right?
Yeah. Yeah. And how long was that? How long have you been holding this one for?
2022, it was
20.
40 in the $40 range. Yeah.
And now you made $40 per share on that, or a little bit
Yeah,
more.
and now it's up. And I'm not sure. Now, this is one. that does not pay a double digit dividend, but it surely
Hmm.
makes up
Yeah.
for it in
You
price
see,
appreciation.
you see how
Now,
attractive this is? Now, we can drive Uber, we can do all these things, right? And Billy does that on the side, so it takes work to do that. But you can
mhm.
sit in front of the computer if you understand technicals, fundamentals, and you can make, you can double depending on
Yeah,
how
I
much
mean, a
money you put
thousand
in.
dollar investment right now will be worth $2,000.
Yeah, yeah.
Plus, they do pay a dividend. When you see this little dollar sign,
Hmm.
it shows you a dividend that they pay. I'm going to go to another window that will help me to uh, locate how much of a dividend they pay. And there's, not even 1%. So,
But it's something. Yeah.
but it's something, right? But the
Hmm.
price appreciation is phenomenal.
Hmm. Hmm.
Another one that has done well is we looked at ET, we looked at the home builders. Now we're going to look at the REIT, the Real Estate Investment Trust. So if you want to be a landlord and don't want to be tackled with all of what it takes, to go look at a property, to find it, to bid on it, and then to purchase it, and then to fix it up, and then try to maintain it, and then try to sell it. That's a boatload of work, right?
Yeah. You've done it.
So
You know.
so you can invest in ABR now. ABR pays a 11% dividend. And you can see through the times, real estate has taken its toll. But now, what do we look at happening here over the past? This is a weekly chart now, so each one of these price bars represent a week. What has been happening here over the last 8 weeks, last 2 months?
One back up. Hmm.
Right. We're seeing, you asked me about the what type of patterns do I
Yeah.
look for when buying a stock. Now,
Hmm.
ABR fits the criteria, and this is one of the featured stocks in the newsletter for August. We have two featured stocks. I showed you ET, the energy transfer stock, and then this is the other one that I featured because of its strong fundamentals. These are the ones that they invest in, all over the United States and all over the world, multifamily homes, multi-family single family homes, and commercial properties, right? So they went through a little bit of a downturn. When I mentioned before, when you have these stellar companies that have stellar fundamentals, they're going to correct. So it corrected for a while, went all the way down to $10. And then all of a sudden, here about 8 weeks ago, it started to emerge again. We noticed that, right? And we jumped in there around about that $12, $13 range. And then for the past, okay, that was on the week of 5/29. This is like in May. You see it break out. The price is above what? This rising moving average,
Wow.
right?
Wow.
And then it just started to go up, 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 went all the way up to $17. Well, you got 13, 14, 15, 16, 17, about 5 points. If you had 1,000 shares, you made $5,000.
Wow.
If you had a
Wow.
hundred shares, you made $500, right? Easy math.
Yep. See what I'm
So now it's
saying?
starting to level
Amazing.
off and, take a little bit of a breather right now. But we don't care
Hmm.
about that. The price is still above this green rising moving average, which is our line in the sand.
Okay.
That's the
Okay.
support level right there. It can come down to 13. Let's see what that support level is. Yeah, about $14.
Okay. Okay.
Mhm.
Wow.
That's an easy way to find out your support and resistance.
Yep. Yep. There is some serious wealth to be made in an easier way once you understand the technicals
Yeah,
and the
in an easier way.
fundamentals.
Like if you're
Hmm.
you want to go buy a single family home to flip, how much money are you going to need to do that?
Just tried it. This is why I'm working because yeah, just tried it and then I realized that okay, you want to buy something that you have to fix up and sell to somebody else. That costs a lot of money,
Yeah, and
versus
time.
yeah, and time.
Right.
Yeah. Yeah, I'm a huge advocate for this way, as
Yeah,
opposed to you
so
always told me that
with
before. Yeah.
say if you want to get 5,000 shares of this, it would have cost you $12,000, and all you had to do is go to bed and get up, and go to bed and get up, do your thing, and every week you woke up, you saw your money growing all the
Goodness
way up to that
gracious.
17 um dollar range,
Hmm.
and it just kind of backed off at 15, but it's paying you.
Hmm.
Let's see if I can show you this. Um, let's see, profitability is giving you a 11% dividend yield paid quarterly.
Yep. Yep. And it's
So
paying you
if the
dividends
price
too.
does nothing, stays where it is at $15 next year, you'll still be up 10%.
Yeah, and it's earning more than a savings account. The rates have been going up on savings account, but it's still nowhere near,
Oh no, nowhere near
11%,
what we
12%.
specialize in at Gibraltar here. We specialize in finding these double-digit paying stocks. We
That's
don't
awesome.
usually, unless it's something exceptional like Pulte Homes. We mostly just look for stock like this that has gone through some correction, and it gives us a signal when it starts to change. Like, wow, this is a double-digit paying stock. We
Yeah.
we jump right on in
Yeah. Yep.
there. Now, another one that doesn't pay a dividend, that has worked well in the past, and you probably heard of it, this is a household name, Cisco.
I looked at Cisco yesterday. Yeah.
Okay.
Hmm.
Um, Look at it. It got beat up
Hmm.
over here last year,
Hmm.
around October of 2022, and then since then it came above our moving average, and that moving average hasn't changed colors except for a couple of weeks. It went down, but it didn't, go below the moving average and turn red like it did over here. See, over here,
Hmm.
you don't want to be in it right now.
Hmm.
Just you don't want to buy this right now. Like, okay, Cisco, I love you, but Cisco don't know you love him.
You in the
So Cisco,
red.
he's going through it market cycles, right? He's going down, down,
Mhm.
down every week. You don't
Uh-huh.
bought over here while it was under a falling moving average, and every time you see this, Jolise, it's going to be 100% accurate. They say there's nothing 100% accurate in the stock market, but I've never seen a stock turn around when it's below a falling moving average. And I have this color coded, and then
Hmm.
we can provide this setup for you when you subscribe to our, uh, uh, I don't want to say channel, but because we use Substack. Is that a channel, or is that
I think
something?
that's what you use as a newsletter. It's a
Yes, a
way for you.
newsletter. When you
Uh-huh.
subscribe to it,
Uh-huh.
we can show you, teach you the methodology,
Hmm.
and so you just have to wait for Cisco. You just can't just be anxious and jump in it. So it has the fundamental. It meets that criteria, because without Cisco, we would have no internet. We would not be doing what we are doing right now if it weren't for Cisco. Cisco is the backbone, the framework of the internet. Remove Cisco, there'll be no internet. And my God, that would be the end of the world for most people.
It'd be what, the 80s?
Right. So the stock is not going anywhere. So after it went through its little downturn, it started to pick up steam again, and it began to show the technicals that we like. Boom, you jump in over here at around the 47, $50 range, and you just watched it go all the way up to 55.
Mm-hmm. Mm-hmm.
And it had a very good earnings on 8/16, and that's what pushed the
Okay.
price up.
Okay.
And it's getting
Have
stronger and
you
stronger.
have you found any so I was searching for some AI GPT type of stocks, and I
Mm-hmm.
found a few. I think it's WPAA or WPPA, something like that, because that's the next wave, right? Also paying
Oh yeah,
attention to the
most
next
definitely.
waves.
That's all the hype.
Mm-hmm. Mm-hmm.
So if you are looking to invest in AI, okay, there are several ways you can do it. This is AI. This is C3. I think this is Chat GP3 or whatever it is.
Mm-hmm.
Um, and it seems to be, doing fairly well. It's more volatile than those steady
Yeah.
eddies that we've
Yep.
seen.
Mm-hmm.
However, you can still be in the game if you understand this rising moving average methodology that I'm just, giving away to the world for free. Most people charge you, take their course $3.99 to show you this information. But
$5,000.
uh-huh. So, but the best way I see I know to invest in AI is with the companies that are inventing AI, all right?
Yep. Yep.
And that is Google,
Mm-hmm.
Alphabet rather. Yes, it's a $133 stock, but if you want to invest in AI, that is one of the companies that putting a whole lot of money into AI. Another one is household name, MS. Everybody knows Microsoft, right? It's a $300 and $400 stock, but ever since that AI has started to increase, since in the AI popularity started to increase in March, um, $263 has become as high as $366, 100 points on your money.
Yep. Yep.
Can you imagine that?
Yep. Yep.
Right?
And you
And
just have to
another one
really.
is what everybody uses most of the time. I don't have it, but META, aka
I thought you
Facebook.
was gonna say that Facebook. Yeah. Uh-huh. Yeah. Look at
These are
that.
your um, dominant companies that are not only using AI, but they're continuing to develop it, pour more money into it, making it more advanced. Now, if you don't have the $200, I shouldn't even. I'm giving away too much there, honey. But y'all, I love y'all. I love you. I love you. I love you. Also, I want you to come back, and
Right.
because
Right.
this is
Right.
just the
Right.
tip of the iceberg.
Right. Right.
If you want to
Give away
invest
one
in
more.
AI and you can have, what if I told you there was a way to invest in Meta, Apple, Cisco, Microsoft, and Google all at the same time without having to buy the individual stocks? Would you be interested in that?
That I would.
All right. I'm going to give it to you for now for free.
And that'll be
There's
it. I'm not gonna let you divulge anything else.
You can invest what is called the QQQ, right? What is the QQQ? The QQQ is the Nasdaq top 100 stocks. Now, to understand, the Nasdaq composite is made up of about 4,000 stocks. However, there is only about 100 of those stocks that control that entire basket, right? So if you want to, perhaps I can share with you the companies that comprise the QQQ, and that can be a freebie that I can give to you and your readers or your listeners right now after the session. And when you look at that list, you're going to see a who's who of uh, companies that make up the stock market, that control the stock market. 100 companies.
Yeah,
They are the
they can
top
look it up
100
too.
companies in the NASDAQ, which is the IT or the tech sector of
Yeah.
the entire market. So the tech sector is not going anywhere because everything we do requires technology.
Technology. Yep.
They're
Yep.
going to continue to
That's
grow
good
like the
stuff.
ET and
Yeah.
all of that stuff with everything requires energy.
Yeah.
So two sectors that really going to thrive and continue to thrive are energy, technology, and then also real estate, home building, and REITs. Those are necessities that we all need.
We all need
And
them.
we
Yep.
continue to see the growth and expansion of that. Now, if $350 is more than you want to spend to own all of those stocks that I just mentioned, what I call, they call them the monsters of tech. That is, your Meta, Google, um, Microsoft, and Cisco, and there's one more, um, Apple.
Mm-hmm.
There's Apple. These patterns all look the same, don't
Yep.
they?
Yep.
But you see, Apple is probably the cheapest one to own right now if you just wanted to be in on the monsters of tech. But if you wanted to
Mm-hmm.
own all five, there's that QQQ is the way to do it. Now
That's the
there is
way
a
to do it
cheaper way to.
strategically.
Hmm.
Mm-hmm. I said that's the way to do it strategically.
Yes, yes, you own all five.
Mm-hmm. Mm-hmm.
You know, but if you just looking for the same, everybody knows about Apple, and if you can follow a pattern, you just want to own Apple, you can do that. Right now, it's giving you a buying opportunity. It's coming into that support, that rising moving averages. 9 times out of 10, when it hits that moving average, it's going to bounce up and start to go back up again.
Mm-hmm.
uh, you've seen that with every chart that I've shown you so far. When the price is above this rising moving average, it's going up. Even Apple had its problems back here beginning August of last year when the price fell below that falling moving average and everything was turning red. It was just going down, down, down
Mm-hmm.
until it hit bottom. And usually with our platform, it gives you a signal when it hits the low before it starts going up. How do you like that?
Wow. Yep. Yep. You know when to get in, and that has been the most challenging part for me to understand. But
Yeah.
the support is what tells you what to
The
do.
support is what
Yeah.
tells you right
Yeah.
now. And then that support level right here was at 124,
Mm-hmm.
and it's been going
Mm-hmm.
up ever since.
Yeah.
Now the
Yeah.
support level here is at 166.
Mm-hmm.
How
Awesome.
easy is that?
Yes, Pops, I have really enjoyed this.
All right, and so have I. I mean, you can tell my passion for it.
Yep. Yep.
Again, I do this with my investment group on a
Yep.
biweekly basis where we go over all of the market, which we don't have time to do it right now. But if
Mm-hmm.
anyone wants to join us, we should be uh, having a session on tomorrow. However, I'm going to try to take us into the next level, like you're doing right now, and put that on video, where you don't have to physically join us, at 9 a.m. to 11 p.m. every other Sunday,
Mm-hmm.
and just do a video showing my screen, just like I did with you, of
Mm-hmm.
what we talk about um, every 2 weeks and what conclusions we come to.
Are you going to
So
have a subscription service? Is there going to be a fee for that?
not right now. Again,
Okay.
we're building up the platform.
Okay.
Everything is free right
Awesome.
now. So those that
Mm-hmm.
subscribe will have access to this information for free. And then
Oh,
again, when we build up enough followers, of course, monetization then comes into the factor. But for
yep.
right
Yep.
now, it's all free. Learn as
That's
much as you can and
awesome.
as quickly as you can right now
That's right.
before.
And let me tell you, I would pay anything for the knowledge, the
Hmm.
fact that a lot of us are college educated, and we've
Hmm.
paid hundreds and thousands of dollars for sometimes professions that don't always net that. So to
Right.
be able to pay, whatever it costs to be able
Oh
to
yeah.
live the type of life that you want,
Hmm.
I pay that in a heartbeat. Yeah.
Okay. Well, all right. I'm gonna start charging $5.99.
5,000, 5,000.
Oh, 5,000. And there are some courses out there that provide you with this same information. And I saw one that it was $4,000. And I
Yes,
know
sir.
of a gentleman that paid for it. He told me that that's what he paid for
Yes, sir.
a
There
couple
are
of years
more.
ago.
10,000, 20,000. I've seen them. And they're
Hmm.
experts. I get it. if you're
Hmm.
if you're branded, you can charge whatever you want. I don't,
Right.
I support that. But thank God, for the free knowledge, and thank
Hmm.
you for 30 years of just wealth building techniques, principles, and the fact that you're so open that we can follow you, ask you questions. Thank you for that. This is what this show is about. You know how you can rewrite your own life into whatever you want it to be. And if you're wanting to build wealth, this is the way that you can build it through stocks, stock
Yeah,
trading.
yeah. The method that has been tested, proven, and tried over since 1952. I mean, these are
Mhm,
not methods that I'm just making up. These are methods that I've
mhm,
learned and practiced and mastered, and they
mhm.
do have a history. You know, especially the University of Chicago have done many studies on the very thing that I'm talking about. That the major hedge funds, mutual funds, all of the big boys in Wall Street use to manage other people's money and pay them a fee, and they get paid for it for doing that.
Awesome.
Hmm.
Awesome. Is there any last tips or anything you want to share just about trading, about wealth building, about anything you want to share with our viewers?
Yeah, basically, you know, the stock market is a source from which investors can buy partial ownership or shares of a company, because that's what you do when you buy Microsoft. Even if you buy one share, you are part owner of that company. And not only does it benefit the business when you invest in that particular business, but it also grows your own personal wealth. I believe that nothing is more important to your liberty than having the know how to invest in yourself. And that's what this is all about, self education. Invest in yourself, take the time to learn, take the time to practice, take the time to master. And I think everyone should learn the basic of the stock market and investing for future wealth, development, and peace of mind.
That is awesome. Thank you so much, Pops.
Thank you for having me, daughter.